It's the beginning of a new month, and that means it is time for your piping hot monthly Bitcoin digest. This month's edition, we are going to focus a little bit more on the macro picture. We're going to be talking about the continued contagion as a result of the banking issues. We're going to be talking about de-dollarization, and we're going to be talking about the continued regulatory and compliance pressures that are impacting the world of Bitcoin and some of the tools that you need to be aware of in order to deal with what is coming. Let's jump in. Welcome back to another video. My name is Ian Major. I'm an entrepreneur, Bitcoin pleb, and all-around raging capitalist. And we have once again got an action-packed monthly digest for today. Again, I tend to oscillate between really zeroing in on very kind of Bitcoin-specific stuff and then zooming back out and doing more macro. So today will be more of the latter. We've got a lot to cover. You're not going to want to miss a thing from today's video. For those returning to the channel, welcome back, my friends, as always. It is a pleasure to have you. And for those new to the channel, I welcome you as well. If you like this type of content, I invite you to consider subscribing and join us in our growing merry gang in cyberspace. We are on our way to 5,000 subscribers on this channel. And so I invite you to come along for the journey. I cover all manner of Bitcoin-related content, including a whole suite of tutorials on how to acquire it, secure it, privacy best practices, running your own node, the Lightning Network, mining, and more. With all that out of the way, though, let's go ahead and jump into the meat for today. All right, so the first topic for today, we're going to talk about the continued contagion, the continued credit risk that we see all over the map. I did a video the other week that I would really urge you to take a look at. It goes in depth into what happened, how did we get here, what is the nature of the Balaji bet. I go into that in a lot more detail, but at a very high level, in a nutshell, what happened is that financial institutions were presented with this problem of like, what do we do with these funds? What do we do with all these deposits? We can't loan them out. There's just not, credit-worthy projects out there at the same scale as, the size of these deposits. And so what do you do with that? Well, you park them in things that are deemed riskless, right? Things like government debt, treasuries, things like mortgage-backed securities that have the full backstop of the government. And then what happens when the Fed hikes rates at an unprecedented pace, the value of those fixed income instruments goes down. And so you now have the entire banking system that is definitionally insolvent. The whole system is insolvent. Again, check out that video for more on how we got here, but we've now seen different measures to re-inject liquidity to help backstop the system. Things like the Bank Term Funding Program, things like international swap lines. And indeed, we've started to see the stress pop up all over the place, whether it's geographically. In this case, for example, we can see that Canada's second largest bank, TD Bank, is now the biggest bank short. So $3.7 billion betting against TD Bank. The concern and realization has also spread to other industries like insurance, which is another great example of, insurance. They have to take these premiums and park that somewhere that gives them some sort of non-zero nominal yield at least. And indeed, and this is my favorite one, we are indeed seeing that credit risk manifest even in United States government debt. So none other than Greg Foss, this great view of what I believe is a 5-year U.S. government debt, and it's looking at the credit default swap of it. So what is this? This is basically insurance against default of the reference asset, which in this case is U.S. government debt. And that's a pretty wild trend. I mean, number one, the fact that it's gone pretty much straight up since 2021, and then arguably even more interestingly, look at how it has just soared and, teleported most recently. And Greg goes through some of his classic math, right? So he says, the US 5-year CDS, 45 basis points. What that's saying is that traders believe the probability of the US defaulting has gone up markedly. Now, does this mean that the US is going to default? No. Traders use this as a way to hedge different bets etc. But it is still indicative of the fact that the risk, even though small in absolute terms, has gone up markedly. So Greg does a little back of the envelope math because he always calls Bitcoin this sort of default insurance against a basket of fiat. I think that's a really good way to think about it. He says, let's look at the total funded and unfunded debt in the US, which is to the tune of $200 trillion, okay? The 31 trillion that everyone sees, and then the 170 that is totally unfunded. Multiply that by 180 bips. He's just scaling the 5-year to the 20-year, which would basically imply that the value of the insurance is 3.6 trillion. Compare that to Bitcoin's market cap. Obviously, there's a huge gap. So that's just like a nice way, I think, to think about the value of Bitcoin I wanted to talk about. I don't know that I've gone through that on this channel in the past. But there you go. So credit risk everywhere to be seen. And unfortunately, things are only going to get worse. James Lavish put out this excellent thread on the Congressional Budget Office projections, some Treasury projections in here. This is what government regulators are telling you will happen, okay? This is what they're admitting to. Number one, we can see this view of the CBO report from February 15th, projecting that deficits as a percentage of GDP will continue to rise over the next decade. And indeed, well over the sort of 5%, you're getting into 6, 7, 8%. That is a scary, scary level, okay? You look at other countries where that level has happened, that is typically the start of, a debt spiral where you just cannot get out from underneath this debt burden because you need to basically print more just to service the existing debt. And it certainly doesn't help when the Fed is raising rates and it becomes more and more expensive to roll that debt over. Furthermore, here's another view. Again, they are telling you this. They're not hiding it. Federal debt held by the public, projected to go to 200% Japan style over the next couple decades. And that's wildly optimistic. So for those of you that have friends and family that just still don't get it, they are telling you what's going to happen. The debt cannot and will not ever be paid. And so there is only one way out of this, and that is some sort of debasement of the currency to either make the debt burdens more manageable or have debt jubilee type events. And a lot of people are waking up to the fact that, whoa, wait a second. This riskless asset, i.e. government debt, that sits at the foundation of the entire modern monetary system, right? This is the pristine collateral that we've been told. People are waking up to the fact that, wait a second, they actually aren't riskless. That has enormous implications that we will see unfold in the coming years and decades. And so, perhaps not surprisingly, Bitcoin has held up pretty well when you look at the fiat exchange rate. Now, it could be a combination of a couple things. People are like, are people finally realizing the value of an asset with zero counterparty risk, right? Properly held Bitcoin in self-custody has zero counterparty risk. It can't be turned off by banks. It can't be diluted. It can't be confiscated. It can't be debased. How long is it going to take people to get this? So I think there's some of that happening, but I also think part of the story is that increasingly markets are betting on the Fed pivoting. You can see that in the inverted yield curve. You can see that in euro-dollar future curves. The market is heavily predicting an imminent recession that will lead the Fed to pivot. And then we've also seen the liquidity injections with things like the Bank Term Funding Program, swap lines, and I'm sure there will be others. So that is probably part of the story as well. So very interesting stuff there. Punchline and all of that, you need an asset that has zero exposure to all this crazy nonsense. The fact that the entire banking system is insolvent, the fact that the pristine collateral asset that sits at the bottom of the entire financial system, i.e. government debt, is not actually riskless. And so the question you got to ask, got Bitcoin? Okay, with that, let's also now talk about our next topic, which is this idea of de-dollarization. All right, so some of us have been talking about this idea for a very long time. People like Luke Grauman, Lynn Alden has spoken about some of this stuff. And there's always floods of fiat academics and fiat economists that say, you don't know what you're talking about. The dollar will remain the king forever and ever. And indeed, there is a high likelihood that the dollar becomes excessively strong, even stronger than it is now, before it sort of fully unwinds. This is somewhat at the core of the kind of dollar milkshake theory from Brent Johnson and others. But make no mistake, the big picture is looking increasingly clear. So let's take a look at some of the evidence. For one, you've started to see trade deal after trade deal after trade deal that's being conducted in a currency other than dollars. It's being settled in something other than the USD. We can see this example from India doing oil deals with Russia. We see this interesting example of China and Brazil. And so you probably say, okay, well, right, like not all that surprising. But then we saw this very interesting example with none other than France. And so Total Energies, French company, sells liquefied natural gas to China, settled in yuan. And what started really as there's like these couple anecdotal examples that have, gone back, quite some time. Yeah, but they're few and far between. Really seem to be accelerating in a major way. You've seen mainstream media now starting to cover this thing. So you know that it's bad when that happens. Again, we see headline after headline, de-dollarization of world economies, Xi and Putin agreement, Saudi Arabia's shift to the yuan. And so indeed, all of this comes when the BRICS basically said, hey, we're open to additional participants. We're open to other countries. And so since the BRICS noted their sort of appetite in welcoming other countries, more than a dozen have expressed interest. You've had Algeria, Argentina, Iran, Indonesia, Egypt, Saudi, Turkey. And so again, you may think to yourself, well, like how meaningful is that? Well, life comes at you fast. Guess what? It is already the case that the BRICS GDP, so what we're looking at here on the y-axis is GDP as a share of the global total. BRICS are already ahead of the G7. Let me say that again for people in the back who may not understand this. BRICS as a percent of global GDP are already ahead of the G7, which include, as a reminder, Canada, France, Germany, Italy, Japan, the UK, and the US. Does this look like a trend that is going to reverse anytime soon? This is sobering stuff. To be clear, I am not rooting for the downfall of the G7. I am technically a part of that. I do not want to see my quality of living deteriorate markedly over the coming decades. But I'm also not stupid, and I'm also not going to evade the reality of what we see unfolding before our very eyes. Last week, a Russian official announced they're working on a new currency, they being the BRICS. And in theory, it could be maybe something backed by something like gold. We've seen central banks, particularly those in the BRICS countries, acquiring gold like there is absolutely no tomorrow. This has really been almost a decade now this has happened, but it's accelerated particularly in recent years. And so you can kind of see where this is heading. I think we'll have more updates on what this could look like in August when they have this sort of BRICS summit, I guess. But they're going to try and come up with their own currency that is perhaps backed by gold. Now, does that mean that that's going to overnight suddenly replace the dollar? No, but it really does usher in this kind of multipolar world. So you've got the dollar that's maybe trading more so in the West to settle trade, and then you've got, the BRICS currency perhaps in the East and global South, etc. So again, none of this happens overnight. It is still the case that the dollar makes up the majority of foreign exchange reserves, but that number fell to 59% as of 2021, and that has gone down year by year by year over the last 2 decades. And so why is this happening? Well, it's really countries not wanting to get screwed. It is as simple as that. When all my debts are denominated in dollars, and that's something I as a central bank can't print, when I have these liquidity contractions and crunches or, downturns, economic downturns, whatever you want to call them, and my sort of income or revenue or tax receipts, whatever that top line is, comes down as a result of that slowdown, but I still have to service this debt that's denominated in dollars, which I cannot print, that becomes very, very hard. And so that puts downward pressure on my currency. That throws into motion all these different dynamics. It makes it harder for me to import critical commodities that I need for my country. Make no mistake, a single country issued reserve currency is a terrible deal for most of the world. It's a great deal for the people in that currency issuer, but even then, that type of system starts to groan under its own weight. Now, to be fair, there also is, I think, some opportunism here happening with Russia and China really using this to place pressure, right? This whole narrative of de-dollarization, again, even though it's not going to happen overnight, chink by chink in the armor starts to come out. And that is very scary because the whole reason that the US is able to spend like a drunken sailor without any consequences that would face any other country on earth, the only reason for that is the perma demand for the dollar. And it gives them space to create balloons of debt and spend whatever they want, right, on things including military. So there is a national strategic security element to all of this. So again, sobering stuff. I think the evidence is pretty unambiguous at this point that this is a trend. It has been a trend for quite some time, and it appears to be accelerating. And indeed, it was very interesting to see gold reaching near an all-time high. And this is despite the rise in real rates, which gold is typically inverse to. So is gold sniffing out a Fed pivot? Is it reflecting the fact that all these central banks in BRICS and other countries are just stacking gold like there's no tomorrow? Probably a little bit of all the above. And dare I say, even as a Bitcoiner, I think having a little bit of physical gold is a smart move. Again, don't buy a gold ETF or any of that crap, but having some physical gold as a little bit of a hedge, not a bad idea. And finally, that gets us to Bitcoin mining. Hash rate has been on an eye-watering tear. We can see in this post, this is looking specifically at difficulty adjustment, which is up 32% year to date. That is absolutely insane. And as Mitchell Hoddle here is noting, like, that's hard. That's hard to do when you're already at the level of hash rate that we see. And so there's different theories out here. It could certainly be the case that some of the big ASIC orders that happened over the last kind of year or two are finally coming online. And indeed, if you break down the hash rate increase by which mining pools have picked up the most activity, there actually is a lot of that happening in Foundry US, which is the biggest US mining pool, and these are typically big kind of commercial operations. But you're also seeing a lot of hash rate in other pools. I think F2 picked up quite a lot. And so it begs the question, in addition to perhaps the back order of these ASICs coming online with more favorable prices for miners, could it also be some sort of, foreign nation state that's getting hashing? I mean, Russia was building a facility for 30,000 ASICs. There were other such sort of stories. So again, I don't know that this is necessarily like, oh my gosh, foreign nations are suddenly following the Jason Lowery kind of soft war playbook. But I do suspect that on the margin, that is starting to happen. So it'll be very, very interesting to see. All right, so quick note. I was going to do a final section for today's video, deep diving into what has been unfolding with Paxful as perhaps another indication of regulatory pressure. Paxful, for context, was, I guess, a peer-to-peer marketplace where individuals could, buy and trade Bitcoin. This was particularly popular in the global south, including countries like Nigeria. And so it was announced initially that Paxful was shutting down, citing a combination of key staff departures and, quote, regulatory challenges for the industry. So they sort of, implicitly assumed that, oh, wow, interesting, there's been some sort of regulatory pressure and crackdown that has led this peer-to-peer marketplace to close, which would be a really, really big deal. With that being said, between shooting that section and doing the editing, it is not totally clear to me that that is actually what's going on. Ray revealed, I think, in a Twitter Spaces that his co-founder, who was sort of pushed out of the company more than a year ago, has a lawsuit against Ray. So again, not really clear what's going on there, and therefore I'm not going to do an in-depth section on it in today's video, but we'll be monitoring that closely as we go forward. For those who may have been interested in or using Paxful, there is a new solution called, I guess it's pronounced No One's. And so you can see No One's, financial super app. They're basically doing chat plus payments all on Bitcoin. So very, very cool. And I think this will be incredibly, incredibly useful and powerful to essentially replace Paxful. With that being said, don't get too excited. It does appear that they are fully regulated. It appears out of both the European Union and the UAE. So again, unclear, but wanted to make that note at the very least. With all of that, let's go ahead and conclude today's video. All right, so we had another action-packed monthly digest today, focused more on the macro picture. We talked about some of the kind of banking and credit risk that seems to be spreading in this contagion manner. We talked about this de-dollarization trend that does appear to be accelerating. Again, nothing happens overnight, and even now with this acceleration, things will likely continue to play out over a long, long time. But the trends at this point are hopefully crystal clear. All the assets that you likely have are premised on this fundamental idea that the base collateral of the whole system, i.e. government debt, is riskless. And so if you think of where can I hide? Where can I shelter from the impending storm? Sovereign debt defaults, of currency debasements, which are the only option out. It is Bitcoin. It is self-custodied Bitcoin. Yes, maybe a little bit of physical gold, but the writing is now on the wall. It's dripping in blood. It is ominous. And again, if you have friends and family who just still do not get it, and I imagine that's 95% of people, you need to help people in your circle get up to speed on Bitcoin and get familiar with the tools and best practices around self-custody. I've done many tutorials on this channel, so you can share any of that with them. But I'm curious to hear, what are your thoughts? What do you think of these different dynamics and trends that I've covered? Are there other factors I didn't hit on or take into account? What do you think is going to happen? Let me know in the comments down below. But for now, we'll go ahead and leave this here. I hope you found this valuable and insightful. If you did, you already know what to do. Give this a like. Use the share feature underneath this video. That really does help get this to a broader audience. And again, it is still my belief that the vast majority of the population is still absolutely sleepwalking, dead asleep to what is happening. Maybe the light bulb has started to flicker and oh, something's wrong, but diagnosing what that something is remains out of reach for a lot of people that just haven't spent the time going through this. And if you're so enamored with this content, you want to donate to a pleb, which really does help me continue to make these videos. You can do so in a number of ways. There's a super thanks feature built into YouTube itself. There's also, if you're using something like the GetAlby browser extension, you can just click that bad boy and send sats directly that way. Or I will have my Lightning address and Strike account on the final page momentarily. But for now, we'll go ahead and leave this here. As a reminder, every sat counts, especially in the world that is increasingly becoming clear. And until next time, my friends, I'll see you then.